Hello and welcome to episode 5 of the Real Estate Macro Podcast. I am honored today by a world-class LP, all-around great guy, and a GP in multifamily real estate, Trevor Thompson. KT, welcome to the podcast.
Man, it's exciting to be here. Thanks for having me.
You bet. And KT, if we could, I'd love to delve in. You have the most interesting in the world kind of background before you got into real estate. And I was wondering, can you tell us a little bit about your experiences in the entertainment industry?
Yeah, so I definitely do. I actually posted a video, Am I the World's Most Interesting Man, which sort of highlights it. So at an early age, I'm originally from Niagara Falls, Canada, hence the name of my company, Niagara Investments. And I started at the early age of 13 with Ripley's Believe It or Not. I worked there all through high school till age 18. Then I went down the street and started work at a new Guinness World of Records. And I spent 18 years working with them, which included being hired by the parent company. So I was a franchise location to help manage the company-owned location in the Empire State Building in New York City, opened up Guinness World of Records on Hollywood Boulevard. And, lots of exciting things happened. Probably the most exciting was the world's tallest lady used to work with me. So I actually traveled with her. And then we gave Michael Jackson a Lifetime Achievement Award. So I actually was like 3 seats away from him at the head table at a lunch that we had with him. Quite interesting to meet him. And then that position stopped. And then I started doing some consulting. Still, while running the Guinness in Niagara Falls, opened up a Hollywood wax museum for the same folks that bought the Guinness in Branson, Missouri. Actually managed it for them for 2 years remotely. And then I wanted to build a Guinness in Orlando. So I wanted to move to America, the land of opportunity. But what had happened, right as I was ready to get a deal done, I raised the money, negotiated a land lease. Ripley's had bought the rights and wanted to do their own Guinness there. So oddly enough, I'd started a second business while I was there negotiating with my landlord. And we were going to open a year-round haunted house. And I got to tell you, that was scary. While it was very exciting, we didn't make very much money. It was a lot, but I made some lifelong friends there. And then I got recruited by a company called I Fly Indoor Skydiving, which was directly across the street. And I started at their original location in Orlando, Florida. At the time, it was not a successful business. We managed to figure that out. So, when I first started, they were losing $50,000 a month. They made total sales of $900,000. And within 3 years, we brought the sales up to about $3 million with an EBITDA, which is the same as NOI kind of in apartments of $900,000. And then we started growing that brand. And so I went through several ownerships. I was there for over 20 years. And I got repositioned in the middle of it where I was just opening new locations, but I opened 46 of 80 worldwide locations. Amazing journey. Loved the company, loved the brand. COVID came along. They decided to downsize, weren't going to go into development. And so that's when I made the switch to full-time real estate. Before that, I'd started passively investing. And I kind of missed an interesting tidbit. At our very first team meeting, oddly enough, the original owner gave everyone a copy of Rich Dad Poor Dad. And I did what so many people did. I read it, it touched me, and I stuck it on a shelf and kept living my life the way I was living. Big mistake. I should have started real estate investing, creating passive income way back then, but I didn't. And then since then, I've been super active. So I've been in a total of 20 deals. 18 of those just as an LP, 2 as a GP, also LP in my own deals. 5 of them have gone full cycle. I've learned a lot of lessons and totally fascinated with it. Just totally fascinated.
And KT, I'm really admire your W-2 experiences. Really, almost. I don't think training wheels is the right word, because you really were really doing growth oriented and business expanding opportunities. And I'm fascinated. How did that translate into experience for your passive investing? Did it help you kind of evaluate opportunities with other GPs?
Yeah, it definitely did. Because it was my businesses were all what I'm going to call very high touch relationship type. We offered an experience at our high fly, especially. And so you connected with people, and in reality, offering people housing and doing things and connecting with GPs that like, and trust It's all very similar relationship building. Another thing that's very interesting is as we grew the company, everything was what I refer to as incremental improvements. So I became fascinated with incremental improvements, just to be 1% better tomorrow than you were today. And we actually took over 3 franchise locations and did the same thing you do when you take over an apartment complex. Put some new management in place, added some capex to the facility, improved the marketing and systems, and increased, in our case, EBITDA, which went up 30%. Same in the apartment complex NOI. So it really translated well for me. And another thing that I find, a lot of people that get into it, they've never actually run businesses. And taking over apartment complexes is running a business. And so some guy that's had a IT job and on a team, yes, they know how to work with high paid, high level tech type people, but they really don't need, especially I'm in the value add space, they just don't have any experience customer facing and relationships and building credibility with people like your tenants and your team. So that's translated very well for me. And just being very entrepreneurial, even though I worked for companies, I always did something on the side that was entrepreneurial.
And KT, I will say, I've seen you. I've had the privilege of getting to know you a little bit, and what I really think is one of your strong points is you're able to communicate with people at different levels and shift very nicely from context. And it seems like that experience is very much emblematic of, hey, on a given day as an entrepreneur or in business development, you're dealing with everyone from a CEO to a contractor in the same day, and being able to shift gears very fast.
Yeah, and in fact, even on a bigger level, dealing with children that were afraid to come into iFly and Fly, and getting down on the floor and talking to them and telling them they could be Superman, so again, all levels, right? So meeting with landlords, executives, people that were buying franchises, multi-millionaires that were buying franchises. So it really did help broaden my spectrum. And the fact that it was a people-facing business, right? In other words, we really worked on a good team environment. We really worked on a good customer environment. We understood, the Simon Sinek, the why people want to come to iFly. It's because they want to fly like we fly. It's a bucket list item. All of those things really translated, to be honest, way better than I even thought they would. As I got into it, I thought, holy mackerel, this is like a much easier transition than I anticipated it to be.
Yeah. And you did a ton, and I mean literally, and it's a really impressive array of different LP investments. Can you talk a little bit about what how you drew from these experiences, and you've now gravitated toward multifamily as a GP? What were those experiences like, and how did you draw on those to kind of narrow in onto the multifamily space?
Yeah, so it's very interesting. So I joined the local mentoring program, not the right one, but regardless, they gave me lots of information and pointed me in the right direction, right? And since then, I've been part of other groups and do different things. But the one fortunate thing that really happened was very rare for this to be able to happen. I was an LP in a position, but I had some bandwidth, some time. So I knew that the guy was stressed. He had 7 deals that were in trouble, including one I'd invested in. So I volunteered to help with asset management. I was closer to the asset than all of his team members. And so I volunteered to help. Interestingly enough, in my help, I realized that asset manager was not doing his job and kind of reported that. And that was the end of him. And then they decided, well, we're still not doing well. Let's blame all our property management companies and fire them all and take it in-house, which they weren't prepared for. So I found myself in the middle of a pandemic, self-managing 176-door deep value add property, but I couldn't have paid for that experience. Yeah. There's no school that would pay for that. And so what I managed to learn from being able to do that, and even though at the end of the day, we had a disagreement about 10 months in, when you're the LP and they're the GP, that means you're gone and they're there. I don't agree with what they did after the fact. And about almost a year later, it sold with none of us making any money. But at least we preserved our capital. And I think if we'd have been able to stay on the path I created, we wouldn't have had a huge win, but we certainly would have made money.
And That's fantastic, KT. I'm really, I think this is exceptional too. I don't know too many people that, as an LP, would be like, you know what, guys, let me hop in here and help out.
Yeah.
It feels like all that experience from expanding iFly and all that experience really just came right into play, and gave you an opportunity to really road test it and translate it into a different context.
Definitely did. And one of the things, again, not that I'm a great genius or anything, but I realized that I was the least experienced on the team. So even the people that in theory worked for me, I hate that word, I call it work with me, but they knew more about multifamily and tenants and those things than I did and the laws. But I wanted to take it to the next level. So I would always push, you know. So part of the thing of being green is you see way more options than somebody who's been doing the same thing over and over again. So, but I wasn't cocky enough to get at that, you know, to feel like I had all the answers. And, you know, and then again, I'm going to call it my scrappy entrepreneurial spirit. Like I realized that this team was stressed, especially during COVID. So I did little things, which don't really want to do again, but I realized the maintenance guy could fix air conditioners and leaks and plumbing and things that needed to be fixed, didn't need to spend his time sweeping the parking lot. So I actually swept the parking lot. And you know, but and then they started joining me. And I'll be honest, I learned more sweeping the parking lot than I did in the office for the rest of the day because they would talk, oh, this tenant here, this tenant there. And, you know, it was again, I hope not to be sweeping parking lots again,
Right.
but I'm more than willing to. And it's kind of getting down to that grassroots knowledge of your property. You learn a lot actually walking the property.
And KT, now that you've transitioned and you've pulled all this experience into the GP space, what is it you're really looking for in terms of opportunity?
Yeah, so I'm sticking to Central Texas for now. I live in Austin, so I'm sticking in Central Texas for my GP deals. And you know, again, my background is to be able to touch it, feel it, impact it by being there personally. But I know that that's not scalable, just as it wasn't scalable with iFly, right? I had 12 locations spread across the U.S. It was really hard. You know, they were all over the U.S. to maintain that personal thing. So my goal is to create the you know, just get the understanding right from I'm going to call it the ground floor up. And then, of course, I'll be able to adapt that and go into other markets and apply what I use without being cocky to think that Arizona or Florida or North Carolina is the same as Texas, right? Because it's not. I'll be honest, even within the city, they're not the same, right? It's a different plan for an asset in you know, deep value asset in a, you know, not so nice neighborhood and a B class asset in a nice neighborhood. You know, they're totally different business plans and strategics, but the elements and all the basics are the same. And so my goal is to balance out a little bit. So right now I'm in 13 LP deals and 2 GP deals. I want to get a little more balance, let a couple of my LP deals come full cycle. And I've been a little bit more creative on my LP deals. So I'm in a retail center, a medical center, a single family home fund, and a new build storage in Charlotte, North Carolina. So part of that was spreading my risk on asset classes, going with experienced partners, and just learning a little bit while being an LP and asking smart questions and paying attention and doing follow up and learning a little bit more about those marketplaces and you know and to help prepare me for when I'm going to be a GP in those other markets.
And KT, your experience as an LP, how has that informed you on what works really well as a GP communicating with LPs in terms of communication? Have you? I'm sure you've well, and you really have told us of an experience of where it wasn't going well. What are the number one lessons that you learned that what works well for a good LP experience?
Yeah, so a good LP experience is you're invested in the deal with somebody that you already have a relationship with. I can't stress this enough. Get to know your sponsor. They may not be the lead sponsor, they may be, but there are so many people that are just bringing anybody into a deal and they're trying to convince their friends to invest in a deal and they don't even really know the main sponsors. Don't do it. It's a mistake. You want to invest with a team that you know, like, and trust. So again, the storage one I invested in Charlotte. I've been working with this lady for a year, invited her actually to join a deal that of mine that didn't go through, but she was busy raising on another deal and couldn't. We communicated a lot. Then she presented that deal to me. Then I looked up the main sponsors and I knew of them, I'd heard of them, I followed them a little bit. And so I decided to make an investment in it. The one investment, the first investment I made out of Texas, I'm going to call it stock, that sponsor for a year. I went to everything they offered. I went to every webinar they were on. I watched every podcast and I looked for clues. And my biggest clue was were they really wanting to educate people so that you could learn real life lessons, not the big picture, buy an apartment complex and you'll get accelerated depreciation and you'll use your IRA money and you'll be rich. No, how do you really grind it out and make people money, the business side of it? And they were also honest with things that didn't go right and how they corrected it. And I think that's huge, right? So a lot of people don't want to admit their mistakes, right? We all want to look perfect. Don't look for people that look perfect. Look for people that are saying, hey, listen, I had a struggle and this is what I did. And I learned, because everybody learns more on their mistakes than they do on their wins. 100%.
Well, I could not agree more. And what I really believe about someone you are getting presented someone who's never made a mistake. If that's really true, unfortunately, there's a higher likelihood you're going to make a mistake. You're going to learn a mistake along with them.
Yeah. And then the level of communication too. So, I've been in some investments where they answered my call right until they got my money. And then once they got my money, they were really hard to get a call from. And they do a quarterly update, which is pretty superficial. I needed to get some information and it took a couple of weeks to get my call answered. I was on an investor call and we finished the first year. And so I said, could I please find out how did the first year go compared to pro forma? And the answer I was giving, you can find the pro forma in the PPM. And I was like, so wait a minute. I gave you $50,000 of my hard-earned after-tax dollars. I asked a question. You said, we're going to perform at this level. And I said, could you tell me the difference between how we performed and what you said we'd perform? And the answer was, go look it up in the PPM. The pro forma has not changed. And I thought, wow.
Not a good look. Not a good look at all.
I never want to be that guy.
In terms of transparency, have you seen a level of difference on how much? Because here's my viewpoint. I literally have an old school. You're my partner, so literally, in old school partnerships, you have access to books like 24/7. You can literally look at the books 24/7. I guess I'm getting an impression it's not always like that. Have you seen
It's definitely not like that, and you're definitely mostly getting what I'm going to call redacted big picture financial statements. You're not getting full copies of P&L. And I understand part of the reason for that. You don't want some guy looking and saying, well, why did this month you spend $1,000 more on marketing, right?
Right.
You want to get some higher level reports, and I understand that. But the difference is, let's produce the high level reports. And if someone has a question that requires a little bit more low level, then you should be prepared to provide that to them. And you should not try to hide it.
Absolutely.
I invested in one deal, and at the very first 3 months, they gave a weekly update. A weekly. Now it was a paragraph. Hey, we've taken over. This is what's happened. Here, and it was simple things like, because they took over a new build, so it was like an 80% occupancy. So there was a lot of interest. How are we growing? Because the first thing was, of course, to get it up into the mid 90s. Then it was to burn off concessions, and then it was to add things. So they went through this whole thing, and they gave weekly updates. So again, very basic, but they definitely it made a huge level of trust. Now they're on monthly, and I think now they've switched to quarterly. But I'm okay with that because I've got this sense of I have an idea what's going on.
And KT, just I want to be respectful of your time here. As we start to wind down here, really fascinated. What have you found works better, monthly distributions or quarterly? Have you seen a big difference in what that does for the LP side?
So I don't think so. I don't mind quarterly distributions. I've been on a couple that I was a prep payment, which is in theory, it's the next thing close to a hard money loan. I was They were paying me monthly, and it was really just more like a debt service, and that was interesting. But to be honest, quarterly returns is okay, especially when you get in multiple investments, trying to track it. And I haven't automated tracking it yet, so now I got to manually enter into an Excel spreadsheet when they send me some money. I need to fix that. And a lot of portals are getting good, but the problem is, I'm on 5 different portals, so nothing is the same anyways. But I'm okay with quarterly. And to be honest, I'm also in some deals where there's nothing, right? New builds, land, and there's no distributions. That's the game you play. And it's a different type of business, right? So, this one, we bought the land and we're finishing entitlements. And now we're a year away from getting a permission to build. And then when you get permission to build, then that land sells to phase 2. And so there's nothing for that whole period of time. But the concept is it should be a bigger return, because in theory it's a greater risk. Another one is a brand new build of an apartment complex. So again, taking a year to build it. They were supposed to start leasing in December of this year. It's rolled into next year, but it's not catastrophic. And there's going to be no cash distributions probably for all of next year as they lease up and start to burn off things. And then again, the play is it would be sold to someone else at a higher value. And so you just got to know what you're investing in and what you personally need. And back when I first started investing, I had a high paying W-2, so I didn't need cash flow. I wanted wealth creation. Now I need a little more cash flow, so I've switched a bit.
And KT, final question, Def Leppard or who else?
Well, so I'm big Slipknot, Rob Zombie. Rob Zombie's my favorite. I've seen him like 10 times. Also love Alice Cooper, seen him about 10 times. So
awesome show, isn't it? Good show. Really good show.
He really does. And I mean, he's an old guy and it's funny. He comes out and does 16 with a crutch, because he knows he's like 80, but he still puts on an amazing show.
Still doing it at 80. That's the way to say it, right?
I know. Well, tell you, I went and saw Kiss, and they're in their 70s, and they, man alive, it was awesome. They
still rock. They still rock, man. That's awesome.
Yeah.
KT, as we final question. If someone wants to know about you and wants to reach out, what are the best ways to get a hold of you?
Yeah, so LinkedIn is easy. Trevor Thompson. Just reach out, say you saw me on a podcast. If you have anything sort of real estate. Facebook, I'm a little less accepting because it's a little more personal side. But again, if I see we've got lots of mutual friends, my website is niagara-investments.com. My email is ktt@niagara-investments.com. And you'll find I'm super approachable, love to talk to people, and love to share my information.
He's not lying, folks. He kept me out of a Texas deal. I'm really glad he did. So thank you so much. And thank you so much for joining us today. Thank you for sharing your awesome experience.
Thank you. It was a pleasure to be here.
Good to have you.